Hello, hello, hello. Mic test. Mic test. Mic test. Hello, 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 hello. Hmm. Hello, and welcome to the 132nd edition of our Trading Opportunities webinar. This is Neerav, and before we proceed with the webinar, let me run down a very quick introduction. And of course, for those of you who are currently live with me in the live chat, let me know how's the audio and video feed going through. It is working okay at my end, but a double confirmation would be much better. So as you guys know, this is the Trading Opportunities webinar series, and we have so far conducted 131 of these. And within these webinars, we have so far captured a total of 330 trades, including the trades discussed in the last webinar. 3 of the trades discussed in this last webinar have played out. We will, of course, check all of them as well as we go through this current session. Those of you watching it for the first time or looking at it as a recording, we go live every Friday at 2 p.m. GMT or 7:30 p.m. IST. So whichever time zone you are in, just convert it accordingly. Right. Going forward with the introduction, I'm also the author of the book Think with the Markets and the video course Complete Guide to Professional Trading with Elliott Wave. Both of those are publicly available. And of course, you can check it on my website. All the details are here. This is the link for the video course. This is the URL where you can find details for the book. Right. And lastly, before we move forward, there is the track record of my past work. The past work basically means past videos, webinars, and everything done publicly. Since 2016, we have been tracking it, and the accuracy has remained, as you can see, much higher than industry standards, 80% plus. All of this is publicly documented, and you can check it anytime by visiting this URL. Right. After that, which we started the Trading Opportunities webinar series, for which we are tracking it on webinar by webinar basis. With that being said, let's now head to the way in which we will proceed with this webinar. Just to give you a quick outlook for those of you joining in new, we will go over the charts of EURUSD followed by crude, gold, S&P, Nifty, and in the end, Bitcoin. Right? If you guys have any doubts or questions for those in the live chat, they can just push it in the chat, of course, and I'll make sure to answer it once our chart discussions are complete. With that being said, let me have a very quick look at the sounds good. Thank you, Etivet, and Matthew. Hello to you. With that being said, let's now head over to our first chart of EURUSD, and here is the recording from our previous webinar. Let's see what was being said on this chart when we were discussing it last time on 6th of this month. Right. So in this recording, you can see that our outlook was that we were expecting that euro is in a zigzag kind of correction, and for which we had marked this level, whatever this box is, as our support level. And the idea was, let me speed it up. And the idea was that the market can test this level and then head back up. This is somewhere around 1.102, a little less than 1.102. And we'll check the, of course, exact levels after this. More importantly, the price at the time of discussion was around 1.10819. And let's now head over to the actual chart of euro right now on screen. So this was the last discussion somewhere on 6th. Where is that? Yes, somewhere here. And as you can see, we were suggesting some downward movement into support box near 1.10, below 1.102, and it has gone. And as you can see here, let me just mark it. That was the first support region. It took support within the first region itself, which was marked and discussed in our last webinar, and seemingly is going up, although I'm not fully convinced with this analysis or count. Let's just break it down a little bit and see what other possibilities exist. Right. So first of all, let me just get back to chat. Yes. So I was mentioning, first of all, we will just look at what other possibilities exist. So from this point of reference, which is the price level of around 1.11976, we are looking at a zigzag correction, right? And a zigzag in Elliott Wave terminologies is something like this. It's like first leg down is called an A, correction is called a B, and the next leg down is called a C. So here you can see that the first leg is complete. We had already discussed it in the last webinar. We were suggesting that the B is also possibly complete, and then the C leg is going to go within this marked box range. Let me mark it again here for the sake of clarity. Yes, and not only has it done that, it went actually to the lower level of the marked level and seemingly is going up. So second argument which is remaining here, which I believe is quite possible, is that C is still remaining and this whole sideways. One second. So as I was saying, C is still remaining and this whole sideways thing is just a wave B, right? In which case this is a possible flat structure, expanded flat, what it looks like from the current price action. And once this B is complete, we will see another leg down, and this leg down will take out this low because it will go for the C leg down. So if that is the case, that basically means we cannot enter longs just yet. Although I have alerts placed around 1.1127 roughly speaking, but the actual trigger level will be above 1.1154, let's say. So above 1.1154, I'll be interested in longs on this counter. And the other alert is just to know things beforehand, right? And on the other side, the short possibility still exists. It is still real and cannot be relegated. For that, the setup is quite simple, below 1.1083. So keep in mind, if this C leg down progression is in play, that is, we are still in a zigzag leg, then the C leg is not required to go very much lower. It can just give a spike lower than this low, and that will be considered that the count is complete. It does not have to go much lower. So that makes the short side play a bit risky play, right? But then again, that's the case with counter trend trades all the time. So just be cautious and better prepare for upside possibilities. We have discussed the view, and as the market unfolds, I will obviously look to update in my Slack group and of course discuss in the next webinar. With that being said, we have discussed all that we wanted to discuss on this chart. If you guys have any doubts or questions, just let me know in the live chat, guys. If you don't have any doubt or questions, let me know how was my explanation. Are you catching it? Are you understanding it? Right? Just let me know. And yeah, of course, for those of you who are new here, unaware of all other things that we do. So here is a Slack group where we post all our analysis live day to day and all the trades, etc., etc. It is available for paid membership right now. And for details, you can just check the link in the description. So this is how we proceed. These are all the markets we cover. Just to give you a quick outlook for those of you who are new here. With that being said, let's now head over to our next chart of crude oil, and let's look at the recording from the last webinar and see what was being discussed on crude oil. It's 15 something something here. Yes. So here is the chart of crude oil from our last discussion, which was on 6th. And what we were discussing was further downward movement. Since I was already short on this counter, I had short positions which were being held, and I was trailing them. We discussed all that in this lengthy discussion, which starts around 12 and goes till around 17, roughly speaking. So basically, the idea was that we expect downward movement, and possibly we did discuss some targets. The minimum target was this level, this alert level. I don't know if we can check out the exact price here, but around this mark of 69-ish level something, I think. Anyways, we'll check it on the live chart now. The main idea was we were looking for downward movement. Hello, Louis. Good morning to you. Here is a live chart of crude oil. Let's see from last discussion, 6th September. The discussion was, I think here, let's check the exact price. So the price at the time of discussion was 69.28, and 69.28 is somewhere here, I think. Let me see. If that's the actual level, no, the level is higher. First, second, third support. This is, I think, possibly the crosshair. Let's check. First, second. So the price was somewhere here, 69.58 level, because what we are seeing on the red is possibly the crosshair. Or anyways, whatever. The price was somewhere here. We were expecting further downward movement, and this is the current count, right? And I was trailing this market, I think around 69.7 or something. The trail was hit, and my longs were auto closed. Sorry, shorts were auto closed in profit. Let's have a very quick look at the actual trade here. Let's see crude oil and the posts. So here we are in the crude oil channel. Let's see what's going over here. Shorts auto close in profit as trail was hit. We'll look to re-enter shorts below 66.396. That was scalp ideas. And expected trail move. Yeah, this was our trail 67.2. That was our trailing stop loss. And this was placed when the market was around 66.2. So 1 point away from that level, which was later on hit. So if you guys remember, this is a short. We were carrying it for many weeks, I think 3 weeks or more. And finally, it has given us good profits. Now, coming back to our analysis, let's look at it and what's really going on here. So here is the chart, and let's take this as our point of reference from which we are running an count for a impulse down. And within this count, we have so far completed a 1 here, a 2 here, a 3 here, and this is the fourth in play is what my take is. If this count is correct, this wave 4 will then further lead to another leg down. That is basically the main theme or the main idea, right? So in this case, the wave 4 generally we look to check the 38.2 retracement, and it has already gone ahead and touched that level. So now the idea remains or arises that perhaps it is doing something else, maybe not. So how will we know that? How will we distinguish that? Let me just mark that 70.36, roughly speaking. So yes, so if we mark this line or level, now guys keep in mind that the price levels I'm discussing here are based on this data feed. So if you are using another data feed, then things may vary a little bit. Well, coming back to our analysis, what I'm saying is that if the market sustains below 70.36, that is what we are looking for. That is the ideal scenario. And if that happens, then we will be interested in shorts. I have pushed an alert around 68.28, roughly speaking, but that is not a trade setup. It's just an alert for me to become aware that the market is possibly going lower, so that I can check the charts again and decide what to do with it. Uh, Multiple case exists here. If the market sustains below 70.36, we can start adding shorts. Like if we are going to add 10 lots, we can add perhaps 2 lots here, and then further 2 lots here, and so on and so forth. We can keep building this position. And another idea exists that we can just add shorts somewhere around 67ish level, which is basically suggesting that the market has gone back a lot, suggesting that it is possibly giving a play for the fifth wave. So both scenarios exist, and none of them is currently active because this market is doing complete opposite. It is kind of above 70.36. So it's a wait and watch for now. If we do see the ideal scenario forming, that is the market sustaining below the marked level, then and then only we'll consider shorting this market. Otherwise, it is also possible that we may need a recount, and this can actually be counted quite easily as 3 here, 4 here, and 5 complete. The only reason I have not done it is because there are a few of my own guidelines which are suggesting further downside, and even if we forego that, there is the idea that this market is bearish, so it is wise to just analyze the bearish counts and give them priority first. So with that being said, that's the trade setup. We look for shorts below it. Otherwise, we just wait and watch. Right? Nothing much to add here. I think we may have some further downward levels. I don't think I have marked them. Oh yes, but they are too low. insignificant. That's some past analysis, I think. So yes, wait and watch market on this counter 70.36 is what we look for. Nothing much to add here. With that being said, we'll now move over to our discussion on gold, which has given us long trades, and I'm currently holding some longs and have booked profits on some. Let me know, guys, if you have any doubt on the last chart of crude oil while I load up gold. Where is the discussion? Perhaps here. Yes. So here is the chart of gold as discussed in our last webinar conducted on 6th. The main theme that we discussed in our last webinar was that this market is looking bullish, and specifically we were interested in seeing this market go higher than 2529. That was the basically the trigger for adding longs. Two ideas were discussed. One was that this market will straight off go up from 2529. Another idea was that it may go up a little bit, and whatever this level was around this, it may experience some resistance, pull back, and then go up. So basically, it was a swing long kind of market. I was not holding any position at that point in time, and later on, I added some longs, booked around this expected resistance level, and then re-entered once it was broken. We'll discuss that now when we move over to our live chart, which is there on screen in front of you. So, as I was saying, we were discussing this market on 6th September. The market was somewhere here, roughly speaking. The idea was 2529. Once taken out, will give us long trades. And this market did test the patience level. It did go literally at that lifetime high or almost to the lifetime high, gave a pullback, and then broke through. Right. And based on our past discussion, we had taken some trades here on gold. Let's just have a very quick look at what the trades were. Re-entered, not this one. Booked profit on longs, added minor longs. So this was some short-term trading. Added longs around 2532 something, and then booked profits around 2548, roughly 15-16 points we were capturing here. And then once the market sustained above this marked level, we were adding further longs. Yeah, it was 2555. So this level re-entered longs, and I did more longs later on. So I'm currently still holding longs on this counter. So now with that aside, let's look at what this count is, what this market is doing. So the count basically is that we are looking at completion of a triangle here. Let me just squeeze this chart. So here is the triangle. Yes. Here's the main important triangle trend line, which is also what you call the thumbnail of this webinar. As you can see, we discussed this in the past session. First test of the trend line, second test of the trend line. And the idea was that either this market will take off from here or it will give another test of the trend line, something like this. And then it will take off. Now, what has happened is, of course, in front of you, there was no third retest. It just took off. So that basically means the triangle which ended, let's just squeeze it or expand it, I should say. The triangle which we are zooming complete over here, that means this becomes our point of reference. And from there on, we have what you would call a impulse in the upward direction. So this is the first leg of the impulse. This is the corrective B wave, or sorry, 2 wave complete. And then this is the nested wave 3 going in the upward direction. So let's break it down for those of you who are not much familiar with the lead wave concepts. What we are talking about here is an impulsive progression in the upward direction, which consists of 5 waves. Within these 5 waves, waves 1, 3, and 5 are forming fractal patterns, which basically means that wave 1, 3, and 5 will have 5 waves inside of them. So basically, if you zoom this third wave, you will find that inside this third wave, we again have 5 legs. You can mark them as a Roman 1, Roman 2, or anything whatsoever. Nomenclature is only used for differentiating degrees. It isn't really a big deal most of the time unless you are doing very high time frame analysis. So here in this case becomes your 1, becomes your 2. So we are basically in the wave 3 here. Generally, wave 3s are known to surpass normal expectations. Sometimes they go 1.6 times of wave 1, sometimes 2.4, 5, 6, even 6x is possible. So these are generally the waves which give you surprises, and we are currently within it, right? So it is basically simple strategy at this point, just holding this thing and letting it play out as it will. Nothing really outstanding here. We were just capturing a breakout trade basically here. The Elliott Wave perspective here helps us to understand which degree we are in, and can we see a bigger appreciation for our speculative position. Let's see the count wise. We are within the circle 3 here. Let me remove this thing. We don't need it. So we are within this circle 3 over here, and within the circle 3 we again have 5 waves, because again the fractal nature suggests that 1, 3 and 5 will have 5 waves. So even this 3 will have 5 inside of it, which we are representing with this bracket 1, bracket 2, bracket 3, bracket 4, bracket 5. So long story short, we are currently inside double bracket 3 of circle 3, right, which will be circle 3 of Roman double bracket 3. You get the point, right? It just gets more and more cyclical, complex, whatever, right? That being said, that basically means we have at least 2-3 legs up remaining, and currently I'm seeing support forming around 25.57 to 25.48 region. So let's just say 25.48, the market should sustain above it. Below it could suggest that this market is possibly doing something a little bit different than our current take, but overall I think the bullish perspective remains. It is in fact playing out, and as a matter of fact we should see some good up move from here, right? We can obviously have some targets here. I think we have at some point discussed some higher time frame targets, but those are not on this chart. Hmm. And I'm not aware which chart it is. I'm following multiple gold charts. Anyways, if you guys have any doubts or questions on this chart of gold, just let me know quickly in the live chat for those of you who are currently live with me, right? If not, do let me know if you were able to understand our entries, setups, etc., etc. And of course, for those of you who are unaware, you can also become a member of our Slack group, private Slack group, and see what I do privately in the members area. I'm just checking something. Not really getting it. So I'll have complete outlook prepared for our next webinar, but for now, I think 24, at least 100 points plus is expected, but then again, that is already there. So basically 2600 is the nearest target, not precise, just roughly saying, but it's already there. So what we'll do is we'll do the simplest thing in the book. We'll check the wave 3's possible projection from wave 1. Let's check that. Although my own analysis will have some other minute details, but let's go with what we have here. Here we have the 2741 level incoming. There are of course other levels. Let me just see. 2677, etc., etc. But 2741 is the main level which we expect this market will take if it's really strong. And here's a comment from Samuel. Good afternoon to you, Samuel. Thank you for your great analysis. Very helpful. That's nice to know. Thank you for your kind words, Samuel. Please, guys, those of you who are enjoying this content, do not forget to hit like, but much more importantly, do not forget to hit share this content with your friends, colleagues, or anyone in your social media group who would be interested in this. We definitely need to reach the right and better audience, more audience. I mean, you guys are already awesome, right? Kindly do your efforts and That's about it for the request. Is someone is asking Gokul, hello Gokul, any forecast points? We just discussed that. So, anyways, that being said, that's our take on gold. Again, this is a long-term kind of target. There are multiple in between targets. You can just pause the webinar by going a few seconds back and check all those. But overall, it's a trail as the market continues going up kind of market. If we are right, we expect to be surpassing even these targets. I'll discuss more detailed levels in the next coming webinar. With that being said, we are done with our discussion on gold. Let's move ahead with our charts of S&P, Nifty, and BTC. If there are any doubts or questions on this chart, do not forget to share them quickly in the live chat before we move forward. Where is the chart? Let's see. Here it is, the chart of S&P's 500. Let's see what was being discussed in our last webinar. Let's see somewhere here. Was it somewhere here? So yeah, so we have the marked levels. Let's play the video. So yes, I'm just giving you a rough idea. This was one of the 2-3 different outlooks which we discussed in our last webinar, and what we were thinking was that this market is in a possible impulse up, which we just discussed. Impulse within an impulse, basically the fractal nature. Same concept was being played here, and the main theme was that incoming support is between 5405 to 5345. Let's see what really happened in the actual market. So here is your 5405 to 5345 range. As you can see, the market literally went to this range. Right. Let's mark it. So market literally went to this range and took support on the upper end of it, which is basically in alignment with whatever we discussed in the last webinar and is going up. Although I still haven't taken any long positions on this counter, I'm still actually I should have built up some longs, but again there was another idea that if 5345 is taken, it could go much lower. That's why I avoided it. But anyways, in this counter, what we are looking at right now is that our idea, which was discussed in the last webinar on 6th September, is kind of playing out. And we expect that if this 2 is complete here, then this market, dot 2 is complete here, then this market can take off from here. That's a strong possible scenario. That again, the wave 2 can also go sideways a little bit, but that kind of remains irrelevant because it has kind of given the upside pattern or a sign that it is going to remain bullish for the time being. So we will look for long trades only. Only thing to keep in mind here is it's a breakout long kind of market here. Not much to discuss. And as far as the targets are concerned, again, there is not much to discuss. This market started this move from 51.60, let's say, to 56.60. So without any much calculation, we can just add 500 points here. So 5900, 5880 ish level is what we are expecting here, basically 59 to 5880. So, anyways, what I was saying was that the counter view to keep in mind is the well, Gokul. I'm not looking at what do you call RSI, etc. And I don't really care about these things. Right? If you are interested in the questioning part, keep your questions related to counts or what we discuss here. Right? And make yourselves a little bit aware of what I do instead of just posting your questions about random technical indicators. That's not what we use. So, anyways, coming back to our analysis, the S&P chart, what I was saying, the scenario to be aware of is that 5345 can still be a thing. If the market goes or decides to go lower, then it can still be tested. Although it is a less likely scenario, I do not think that's going to play out. But we need to keep in mind, because in case it plays out, our stop losses have to be really wide. As you can see, 5345 is quite lower than our current price level. So whatever positions we take, we'll try to take them on a swing perspective, smaller position size, bigger stop loss, and then expect to look for our upside target of 5880 to 5900 levels. That will be our take on S&P breakout longs, swing perspective, and wider stops, considering both scenarios for this counter. Again, that's the overall outlook, shorter time frame perspective, etc., etc. I obviously post in my Slack. Right. With that being said, we are done with our discussions on S&P's 500, and like to now move on to our second last chart of Nifty. So here let's have a look at what we discussed in our last webinar on the chart of Nifty 50. How many different things I've drawn here? Somewhere here, maybe. Yes. So here is a quick rundown of what we discussed in our last webinar on the chart of Nifty 50. We were expecting overall bullishness on this counter, and there were two views. One was that this leg C down, let me change the color here. I'm drawing over past videos recording, past webinars recording. One was that this C leg can go bit lower and then take off, and the other view was that this is the A, this is the B. It can go a little bit up and then correction and then up. So basically, there was bullishness, but only from a swing perspective. There was no what do you call swing bearishness. The bearish outlook was short term, which is what we discussed in our last webinar. Although my idea was that at least one or so leg will come to pass here, but that actually did not happen. The market actually showed some good reversal here. Let's look at the actual chart now on screen here. So we discussed this market on 6th September here. Yes, here. So after that, the market did not really go anywhere bearish. It didn't even give us a red candle, to be precise, on a daily chart. And since then, the market has continued up, which basically means it is following our count, the green count. S&P is greater. It's actually triggered my long entry, I think. So I'll take it right after the webinar. Anyways, let me just quickly show you what we are discussing here. Hello, Dharmesh. So yes, what I was saying was that we are expecting that this market is giving us movement in accordance with our green count. What is the point of reference for this count? Yes, here. So what we are expecting is this is a wave one up, and after that we are looking for a correction, and after that correction we expect another upward movement. So in this case, the correction has not clarified itself completely. It may very well be what you call going still on. That is, this wave 2 may not have completed here, but as a matter of fact is going on like this. So basically flat kind of movement is what we are thinking might be progressing here. So long story short, even if this market is going for a flat movement, I have resistance levels placed around 25,670, sorry, 25,670 and 25,511. So let's say 25,500 to 25,670. Within this level, we can expect some resistance, but if the market surpasses that resistance and sustains above it, then we expect this market to go further up, right? So it can also go straight up. So long story short, our bias remains literally bullish, completely bullish at this point. And only time I see a problem forming is if this market literally goes below 24,000. Actually, it is, yeah, it is that level. This is around 24,000. So if it goes below 24,000, then only we will be considering bearish scenarios, right? And otherwise, I don't see any problem. As a matter of fact, there were multiple long trades we had on multiple stocks of the constituent of this index, basically. Specifically, Bajaj Auto, where we have captured a roughly 6 to 7% move. Our target was around 11,800. which actually got hit today itself. Apart from the other stocks, here's a quick look at our stocks channel. Target 11,808. We were tracking it for quite some time alongside other stocks. Anyways, so long story short, our outlook remains bullish on this counter. There is not much to discuss here. What is this? Put long-term investment. What are you typing, Dharmesh, above this comment? I'm not sure what it is. Who is Rajesh? Kindly keep these questions or comments specific. Don't write random things here. Okay, guys. So that being said, I have two counts here. I have to remove one. That being said, this is our main theme, and I have discussed both scenarios, marked levels, etc., etc. If there are any doubts regarding this outlook, you can post them in the live chat. Otherwise, we'll move over to our last chart of BTC. Where is BTC? So here is our last discussion on BTC somewhere here. Let's say, let's see if it is there. So yes, here in the last discussion of BDC, we discussed the long-term perspective on this counter, and the idea was that we were in a wave 4 of the impulse. That was the idea. Let me just play the video and see if we can quickly go and discuss. Yes. So from this point of reference, our idea was that either this is a 1, 2, 3, 4, 5 up, or this whole box range is a sideways range. We were on the daily chart. Yeah, daily chart. That's what I was saying. We did a long-term discussion. So both ideas were valid here, and we were basically suggesting that the marked level or the important level, let me play it somewhere around here. The important level was 51,370. So as long as the market sustains above it, we will be looking only for long trades, and below it, the possibility of a further bearish movement will develop. Now, what has happened so far is that the market has kind of remained unclear. It is 51,360 or whatever level was. It's the market is still above it. It hasn't given a breakout to the upside, crossing 72,000, hasn't broken to the downside, breaking 51,360 or whatever that level was. So it is kind of in the middle, and that basically means a lot of other possibilities are still existent. Let me just give you a quick rundown of this. So this is what we discussed in the last webinar, that this is the box sideways range. And as long as the market is within it, a possibility like this is not out of the question, right? And the second scenario was that this box range is only visible because we drew the box. And the main theme is actually that this market is in an impulse, which would suggest straight up move. Now it comes down to this: if it's a up move, then we want to see breakout, at least a move above 68,800 something, let's say 69,000. And if this is the wave 4, then we want to see below 50,000 move. For if this is not the wave 4, then we want to see below 50,000 move. We had a specific level 51,360 before we could 51,370. Yeah. So below 51,370, we consider the possibility of further bearishness, right? So these were the two main themes here. Nothing much to add here. Short term wise, this market is very unclear. If we go on the 4-hour chart, what we see here is sorry Rajesh, what have you typed? A lot of comments here. One second, guys. In the Elliott Wave course, currently it's in English only. Dharmesh, you can check it on the website. We currently don't have any plans for Hindi course. Sport long-term investment. Rajesh. Okay, Rajesh Export is the name of a stock. Okay, I have never heard of this stock. Sorry about that. I'm not taking any requests in these webinars. There's a bunch of stocks which we discuss, and sorry, not stocks, instruments we discuss, and we currently just do that. Right. So let's resume our discussion. So as I was saying, this wave 4, which is this point of reference around 73,740. It could have ended here. We have already talked about this being a WXY correction, ABC correction. There are multiple outlooks. it could just be continuing as a WXYXZ and have one more leg, or it could have a strong bearish move. So since all of these things are possible, I have not really cared to do further analysis on it. And as you guys already know, this is not something I generally trade. I'm just tracking it on and off sometimes for the viewers. But for trading perspective, I think as long as it is bound within this range, the plays are going to be short-term intraday complex plays. And currently, the only play I'm seeing is minor longs can be taken above 64,407. This is keep in mind using this data feed. If you are using a different data feed, price levels will variate. The idea will be that at least we will see some minor lag above 64,407. Not sure if it will be worth your while, but that's about it on this counter. And on the downside, we remain aware of 51,370. Below it, bearish plays will become active. That's about it for our quick take on BTC and longer term outlook for this chart. With that being said, we have now discussed all the charts we generally do discuss. And those of you guys who have joined in live, thank you for staying here in the webinar live with me. And I can see a good amount of audience here till the end. Thank you for staying till the end as well, guys. Do not forget to hit the like, and much more importantly, share this content. The future webinars obviously, guys, depend on how much you share it. We still have to hit a good amount of number on it. As you can see with the past webinars, we have not even crossed the 1,000 mark. So your contribution is required here. Kindly help me reach the right audience. Don't just come in and leave. That's a very small ask from you guys. And of course, those of you guys are enjoying the content, they can just contact me further for Slack group details, etc., etc. With that being said, let's say bye for now. And you're very welcome, Louis. And see you guys in the next webinar. Take care. Bye.